Hello everyone, happy Thursday. Welcome to our fourth episode of How To with Ziad. So today I'm going to be asking questions to financial advisor Ziad about credit. So this has been one of our most requested topics. So we'll be discussing credit scores, credit cards, anything to do with credit. So please ask any questions that you have while we're live in the comment section and we'll try to get to them right away. So let me invite Ziad on right now. And while I'm inviting him on, we're waiting for it to connect. I would just like to remind you that all the information that we will be discussing today and sharing is for general information only. It is not intended to be specific advice for any individual. Hello, Ziad. And to determine what course of action is best for you, please consult your financial advisor. Hello.
Hi, Mia. How's it going?
Going well. How are you doing?
I'm doing well. It's been a busy week. Yeah.
It's a nice sunny day in Santa Monica.
Yeah, definitely beautiful.
Can't
Looking forward to the
complain.
weekend. Yeah, exactly.
Cool. Well, why don't you start us off and get us an introduction of what we are going to be talking about today?
Yeah, so like you mentioned before I hopped on, credit cards is one of the biggest topics that people have questions about for us, and most people do own a credit card. And so we just want to go through the details on why you should own a credit card and certain things that you can do to maximize your credit score, what that credit card is for, and why it's so important to keep that score up to navigate through the financial world.
Absolutely. Well, I guess to start off, I had a debit card for a very long time. I was very excited
Yeah.
about it when I was in sixth grade, and it worked great for me. That's where I kept my money. I used it for all of my purchases. I didn't really see the need to get a credit card. I since have gotten a credit card, but why don't you explain just the basics of why someone should get a credit card?
Yeah, so a lot of people, when they think about a credit card, they just think about it as a way for them to spend a little bit more than they necessarily can. You think of examples of, hey, I want to buy a new pair of shoes, but I don't have enough money. And so I'm not getting paid until a week from now. And so I'll put on my credit card, pay later.
Mm-hmm.
One of the biggest reasons why you should have a credit card is because it's a really great way to build up your credit score. And when you have that credit card, you're able to make minimal purchases that allow you to continue to build that up for other bigger loans and bigger debts that you're going to take on as you grow in your financial life.
What is a credit score and why is it important? I heard you mention that.
Yeah, so a credit score is basically a measure of your capability to pay off your debts in time. It's what a lot of banks and lenders will use. That's the number that they pay really close attention to is that score. And really, like, having a high credit score is what's going to allow you to navigate through the financial world and receive a lot of benefits. Even renters check your credit score to see if you're someone who's had a good history of paying off their debts in time, and use that to determine whether they think you're going to be able to pay rent, right? And so
Mm-hmm.
when you have a high credit score, you're able to get lower interest rates on your loans. You're able to get approved for higher loan balances, and even and other benefits in your life. I like to use a personal example. When I moved to LA originally, a lot of rental applications asked for a credit score, and there was actually stipulations in most of them where if your credit score was too low, you would have to pay twice the security deposit than normal, and that can be seen everywhere in your financial life. So keeping that score up, it's going to put you in a much better position. It's one of the most important metrics that you have with your finances.
That's interesting that you brought up rental applications, because when I was looking for my apartment, I had to provide my credit score and show that to my landlord.
Mm-hmm.
And I was surprised because I hadn't had a credit card for that long. It had honestly only been a couple months at that point, but
Mm-hmm.
I had a good amount of credit. And I realized that was from some of my parents' credit cards where they made me an authorized user.
Mm-hmm.
But I guess my question is, if they were to remove me as an authorized user, would that affect my credit score?
Yeah, so the short answer is yes. We actually see this a lot of the time. Parents will set up, they'll be the primary card holder on a credit card, but then they'll place their children as an authorized user so that they can start building up that credit score for their children before they really need to utilize it. So It's great, it's a great thing to do, especially if you're a parent. Definitely think about it once your kids are in their teenage years, about just setting them up on that card. Always a great opportunity to teach them about, about the different things in the financial world, provide financial literacy to them at a young age and in a safe, while they're still living under the roof in a safe place. Um, but if you are removed as an authorized user, that shows on your credit history. And so one of the metrics that are used when calculating your credit score is how long have you been building credit. And so most of the time, when you're an authorized user as a kid on a parent's card, that's one of the first cards that you have. And so if you're taken
Mhm.
off that, that goes away from your credit history. And so it's not included in the calculation anymore. That might bring it down. And so you want to just stay on there.
And I mean, I was really lucky because my parents were very good at paying off their credit card at the end of the month and also just keeping up their credit score. But if my parents weren't doing that and they had a low credit score, would that also impact my credit score?
That would also impact your
Okay.
credit score. If they're not paying it off, it reflects on yourself as well. And so, as a parent, you obviously want to be conscious about that, have that conversation with your kids to make sure that they aren't spending as much, and then also make sure that you can afford those payments as well.
And if I am applying for my first credit card, I don't have a credit score yet. How do I get approved to get a credit card? And what range is a good score?
Yeah, so that is a very common question. There are credit cards out there that are starter cards, basically beginner cards
Okay.
that don't give you a lot of room to spend. They have low spending limits and don't provide a lot of benefits, but they're great as a starter card. They're great to just start building credit, spend on that a little bit, and bring that up. And so apply for those, build up that credit. Once your score is up a little bit higher and you have more experience with the credit card, then you can apply for a better card that has better benefits and higher spending limits.
So I guess that opens up a broader question of how do I know what credit card is right for me?
So it really just depends on your situation. When you look at a credit card, you really just want to think about what are the benefits that are provided with it. And so with that, if you want to match it with your lifestyle. So if you like to eat out a lot more and you
Hmm.
want to maybe get a card that rewards you for eating out a lot more because that's just very natural to you. If you're someone who prioritizes travel, you might want to get a card where the points are geared towards giving you the most miles that you can get possible. And so just take a step back and think, hey, what is important for me? What do I spend on a lot? And what do I want to get out of this card? And then go from there to pick what's best for you.
Got it. And how many credit cards is a good amount of credit cards to have?
Good amount of credit cards. You want to keep the number a little bit lower. Generally, we say about 2 to 3 cards is great. You want to keep them as low as possible. If you do have more than 2 to 3 cards, you may want to take a step back and just evaluate the situation. See, ask yourself, why do I have all these cards? What is the reasoning behind that? What is the rationale? And then go from there to see if you need to cancel a few cards or just stop spending on those cards in general.
And Andrew, I see your comment right there. Great content. This needs to be discussed more. We totally agree, and that is why we are doing this live. And I just want to reiterate, if you weren't here at the beginning of this live, please ask questions, comment while we are talking. This is for you. We want to provide useful information for our audience. So please ask any questions that come up. But I guess my next question would be, if I can't pay the money that I spent on my credit
Hmm.
card by the end of the
Hmm.
month, what happens?
So if you can't pay off that credit card debt at the end of the month, the biggest detriment to credit cards is that if you have an outstanding balance, the interest rates are really high. That credit cards tend to charge anywhere between 15 to 25% interest, and that's just way too much. And so you want to avoid that situation. If you are in that situation, do your best to minimize spending in general on your credit card and just with the rest of your financial life for the time being, and pay down that debt as soon as possible. Once you do, just try to be consistent and on time with those payments, and make sure that you're spending within your means.
And if I
It's a
already
big
have bad credit, then how can I start to repair my credit?
If you do have bad credit, the biggest thing is keeping your balance at zero every month, paying off your credit card in full, consistently, and on time every month. Those are the biggest things. Just to touch on a little bit on the previous question with having an outstanding credit card balance. In our
Hmm.
last episode, we talked about saving and spending within your means, and that same theme is very heavily applicable to this right here. The one major downfall of a credit card is that it's very easy to fall into this trap where you overspend. You're spending more than what you actually make. And a lot of people end up falling in this hole where they have this large outstanding debt, and you want to try and avoid that and really take a look at your budget and make sure anything that you're spending on your card is something that you know you can pay off at the end of the month.
Right. And if you would like to go see that episode, we keep all of our Instagram lives in our IGTV on the Gerber Kawasaki page. So make sure that you're following us on Instagram. If I am not using a credit card that I had before, should I cancel it?
No, you want to keep that credit card. One of the major factors of calculating your credit score is your credit history. We alluded to it before with being canceled as an authorized user on your parent's card.
Mm-hmm.
Even if you're not using the card, at least you want to keep it open, because when they check your credit card history, they're going to see how far back have you built credit. And so if you cancel that card, it's not going to be there anymore. And so you want to keep that on file, because that'll help your credit score. If you cancel it, it might actually bring that score down, which is not a great thing.
So we keep talking about what brings your score down, what brings it up. Could you just go over what goes into calculating your credit score?
Yeah, so there's a few factors that go into calculating your credit score. There's about 5 or 6. First and foremost, the major factor is paying off your credit card consistently, paying off your credit consistently and on time. And this doesn't just go towards credit card debt. This also goes towards, student loans, your car loans, your mortgage loans, all that kind of stuff. Making those payments on time is really important. One of the biggest things that people track. Beyond that is also just how much outstanding balance do you have. If you have a high amount of credit, if you have a high amount of debt in general, that does not look good on your score, because that's a lot of payments that you have to be making, a lot of debt that you have to pay down. So keeping your debt as low as possible is a good thing. Beyond that, you want to, having different types of debt is something that's also kept track of. So having credit card debt is good, but also if you have an auto loan or a student loan, that's not a bad thing. Having diverse areas of debt and being able to pay those off actually positively affects your credit score. Also, the ratio of your credit that you are spending is really important. So just to clarify what that is the percentage, if you have a spending limit, you want to spend about 50%. You want to put 50% of debt on there. You don't necessarily want to be hitting that 100% limit. If you have a credit card and you can only spend $5,000, you don't want to be maxing it out and charging the whole $5,000, right? And so keeping that low is really important. And then also the last thing is really just how many credit cards you open up, or how much debt that you're taking on at once. If you open multiple accounts of debt, if you're taking a mortgage loan and open up 2 credit cards at the same time, that doesn't look really good on your score. And so you want to be cognizant of how much debt you're bringing on at a single moment. And so just be aware of that.
So if I am spending over that 50% of my limit, but I'm paying it off every billing period, will that still negatively impact my score?
No, that will not. If you're spending that amount and you're paying off consistently and on time every month, that's perfectly fine. That's actually going to look really good and help you build up that score.
Okay. And then I guess, what's your opinion on store credit cards? So they're always very enticing. You go to TJ Maxx, you go to Old Navy, and they'll offer you 30% off on your purchase right there if you sign up for their credit card. What's your opinion on those?
Yeah, so if you sign up for a store card, that's great, to take advantage of any store discounts or promotions that they offer. But if I wouldn't think about using those cards outside of whatever store that it's purchased through, those kind of cards don't really offer a lot of major benefits outside of that. And there are better cards out there, but take advantage of those discounts, take advantage of those promotions. The one thing I would just keep in mind is if you open multiple cards at once. So if you went to Old Navy and opened up an Old Navy card, and then the next minute you go next door and open up a TJ Maxx card, right? That's not going to look good on your score. And so just be aware of that as you're opening up those cards and to take advantage of those discounts.
Yeah, I think it might be too enticing to spend a lot of money at those stores if I opened up a credit card under them.
Yeah. Yeah.
I don't need to do that. What should I do if I have a large balance of outstanding credit card debt?
Yeah, so if you are in that situation where you have a large balance of outstanding credit card debt, the first thing I would look into is what's called a balance transfer. So basically what that is you're taking all of your credit card debt and you're putting that onto one card. Generally, those cards offer a promotional period from anywhere between 12 and 24 months where they're going to charge you 0% interest on that card. That's your opportunity to pay off as much of that debt as possible, right? You want to limit your spending, save as much as you can, contribute as much as you can to that card to pay it off. After that 12 to 24 month period, depending on the card, then those rates will then shoot up to anywhere between 18 and 25%. So you want to take advantage of that period. If you are still having trouble beyond that, that's where you want to, work with a financial advisor, right? And sit down with one, talk through your situation so they can see what kind of options are available to you. Be creative about, maybe, if need be, utilizing your investment accounts or other accounts that you have set up to try and pay that off. And so sit down with an advisor before you make any big decisions with that, but there are options out there for you.
Definitely.
Mm-hmm.
Well, I want to open it up to anybody watching if anyone has any questions that they would like us to answer. And if not, then we were sent some questions ahead of time that I have written down here. So let's just start out with the questions that were sent in before. I had someone say, I had an emergency and had to spend a lot of money on all of my credit cards. I have a lot of debt. What do you think about consolidating debt?
I think consolidating debt is a good option. It really is just a case by case basis. A lot of the times when you do have different cards and you consolidate it, you will get charged a higher interest rate on it. But if you have outstanding debt, a balance transfer, that is why it's such a good option, because you are able to consolidate that debt and pay it off in a 0% fee. Also, if you having trouble keeping track of all these cards, consolidating is a great way to make sure that you are making those payments on time. So it's not a bad option, just something that you want to review on a case-by-case basis when you go about it.
And then I see a question from Danilo here, which is, what are the best cards for rewards?
So one of the cards that I recommend, and the one that I use personally, is a Chase Sapphire card. They do a great job of rewarding you with points anywhere that you spend. They're great with travel, great with miles. Like I said before, it is really dependent on what your goal is with those cards, but I personally do like the Chase Sapphire card a lot.
Chase Sapphire. Okay, and another question from Andrew. We have, how often should a credit card be used if person happens to have, let's say, around 4? Should they use one card and switch every month?
Yeah, that's a great question, Andrew. It really doesn't matter which card that you use. I would just say prioritize the one that has the best benefits for you. Don't necessarily cancel those other cards, though. Like I said before, you want to keep a long credit history. So if you have an old card that doesn't provide great benefits, but is one of the older cards you have in your history, keep it there. Just don't spend on it. But prioritize the benefits when it comes to that.
So it's definitely okay to go up into having more cards if you are not using old cards as well, right? Because we talked about having 2 to 3 cards, but let's say you have a card that you aren't using anymore, then you kind of can go above the 2 to 3 number.
Yeah, definitely. I mean, 4 cards isn't necessarily the worst thing. Maybe, like I said, really it's just about the history, the credit history, that's the most important. And so if you have those cards and you aren't spending on it, it's not necessarily a bad thing. Just make sure you don't overspend on those cards either.
Right. You have to pay credit cards back.
Yeah, of course. That's the nature of credit is, what you're basically, making a charge that you're committing to paying later. So when you have a credit card, if you charge on a credit card, say earlier in the month, you're responsible for paying that back. The credit card company is taking on the burden of that payment for you at the moment with the agreement that you'll pay it back later on. Um, and so, yeah.
Absolutely. So here's another question that was sent in ahead of time. Why is paying your credit card on time so important?
Paying your credit card on time is really important because it helps boost your score. And if you don't pay your credit card on time, then it does negatively affect your credit score. And so you just want to be making those consistent payments. It's the best thing that you can do to boost that score is just making those payments on time.
Absolutely. Another question is, can I take a hard inquiry from my credit report?
So you can. The big thing with a hard inquiry is it does it does affect your credit score. So if you do take a hard inquiry, make sure that you are able to qualify for that loan. A lot of the times, just to backtrack here, a lot of the times when taking a hard inquiry happens when you're taking out a loan from the bank, or you're taking out a loan for you're refinancing, anything along the lines of that. The bank is basically making sure that you can qualify for whatever loan you're applying for. And so a lot of the times I recommend taking a soft inquiry first to check and see what is your credit score actually before it negatively affects, before it brings down that score with that hard inquiry. And so just be aware of that. Check your score beforehand. If you feel like it's a little low, then maybe take a few months to build up that score a little higher before making that actual hard inquiry.
Okay. And last question is, I have fraud inquiry on my credit report. Can I get this removed? How do I remove it?
So if you have a fraudulent inquiry on your credit report, this happens a lot of the time. There's identity theft. There's people making these false charges. You can work with your credit card provider. They're very accommodating about adjusting this and removing that from your credit history so that it doesn't negatively affect your score. I mean, it really isn't your fault. And so as long as you explain that to your provider, they're going to work with you to make sure that that doesn't hurt you.
Great.
Also, I saw a question from Nick Vogt. Wanted to answer that one just in terms of checking your credit score frequently. If it is a hard inquiry, it will negatively affect your score. A lot of places offer soft inquiries. Credit Karma does a great job of that. Mint as well. I use Mint personally for budgeting, but they also offer credit score checks that are soft inquiries. And so those actually won't negatively affect your credit score. And so those are fine. To clarify on that, when you do have a hard inquiry, it basically is indicating that you're planning on taking on more debt. And so that is why it negatively affects your score, because then you're increasing the amount of debt that you actually have. And so that's why the soft inquiry is the best way to go.
Thank you. I missed that question. So thank you for answering that. Well, Ziad, thank you so much for joining me here and doing this 4th episode. I'm so excited that we've been able to continue this series. I love it. Please send us any topics that you would like us to discuss next week. We're always here live Thursdays at 1 p.m. And if you have any questions after this live, please DM us, or you could always reach out to Ziad at Gerber-Kawasaki.com, or you could give our office a call, 310-441-9393. Before we end here, Ziad, do you have anything that you would like to add?
Yeah, just reach out to me, Ziad at Gerber-Kawasaki.com, at Ziad Ajazi on Instagram. You can look at my LinkedIn. Thank you guys so much for being a lot more interactive this episode. We do love answering your guys' questions, and we are doing this for you guys. And so keep it up, and looking forward to next week.
Yes, investment talk. Thank you for making us laugh and putting us to the test. If we could stay straight-faced during this episode. Thank you, everybody, and we will see you next week on Thursday.
Yep. Have a good one.